All right, traders, we have the CPI inflation report coming out tomorrow. I am going to prepare you to trade the best setups at the best prices. I'm going to give you some tips and tricks on how you can trade this heading into tomorrow morning. I'm going to be sharing with you the best levels to be buying call options and the best levels to be buying put options. I'm going to show you where the bull and bear traps are going to be created heading into tomorrow. I'm also going to be recapping some of the trades that were made towards the end of this video. I started off hot with 6 wins, and then I flipped green to red, making a very poor trade into the close. I'll be breaking that down later towards the end of this video so you can learn from the mistakes as well. Let's get straight into the analysis. So in terms of the SPY, we have CPI data coming out tomorrow morning. With that being said, this is going to be your best possible level to short the SPY and buy put options. And these are some tips I can give you. So if this does end up having a upside move to the upside, some tips to short selling, some tips to buy and put options would be to focus on the pre-market highs. And if it has a nice crash from those pre-market highs, focus on waiting for it to bounce back up to that previous support level that cracked, that previous resistance level, not the exact high, but the previous support, the previous resistance level that should be closer towards the exact high. So that's one tip I can give you wherever that's going to be in the pre-market. Another thing is $414. We have a gap to fill at $413.98. You can see we have major resistance at this $413.98 level. Even on this day right here, I have 414.57, and then it dropped all the way to 405.81, closing weak towards the lows. So that is going to be your most attractive level for puts, along with looking at the pre-market resistance. If it has a big sell-off during pre-market, study where the sell-off was created, not the exact top. So what do I mean by that? I'll give you one quick example. Let's say that this spikes to 413. So it tops at 413 and it has some support at 412. You know that because it starts bouncing at a support channel. Then it goes back to 413. And then once it cracks 413, it cracks that support. You now know that that's going to be the key level to short when it rips back to 413 and not 414, because that support level is now cracked. And if it has a big drop, it should react as a resistance level whenever it decides to pop back up, right? So instead of shorting that double top, you can look to short where that support is. After it cracks, wait for the big drop. Then when it spikes back up, short the retest. That's what I mean by that, right? So that and 414 are going to be your attractive level for puts if this does end up gapping up. And that's how I would play this if it did gap up. Now, in terms of other key levels, and if this were to gap down massively, we're going to go over a key level, 409.72. Keep an eye on that level. That's make or break. If we gap down, have a massive pullback, you can eye that for some puts, but you don't want to risk a lot. If you're buying puts at 409.72, again, only if it looks bearish or has a massive gap down, massive move to the upside, then your max risk on that is going to be like 410.50. You don't want to risk more than like 410.50 on that, right? Another thing is, in terms of call options, if it has a massive gap down and you're looking to play a dip, you're looking to play a reversal, 405.70 is a key support level with a tight stop. If you get stopped out on that, look for calls at these two levels. The lower the level, the better. One at this gap to fill right here at 403.72. Excuse me. And another at this gap to fill here at 401.30. So that's how I would play this. And it's very simple. So like I said, if it gaps up, look at the pre-market resistance. If it has a nice pullback from pre-market resistance, study where that pullback was triggered, when it cracks support. When it retests that support level, if it spikes back up, short that, right? 414 would be a phenomenal level for puts as well. If it gaps down, then you can try puts at 409.72. If it spikes up, with a stop at 410.50 for a gap close reversal play. And then you could try calls at support levels. And there's going to be 3 support levels. There's going to be support at 405.60. There's going to be support at 403.60. And there's going to be support at 402.23. The lower the level, the better. Look for floors. Look for bullish confirmations when buying at the lower levels. And in terms of resistance, look for bearish confirmations. Look for ceilings. Look for roofs. Use confirmations. Give it some time and wait to see and identify. Is it forming a ceiling? Is it forming a roof? Is it forming a resistance? Time for puts. Outer key resistance. Is it forming support Is it consolidating? Is it bouncing off our key levels to buy calls? Time to buy calls, right? So those are some tips and those are some tricks that I would give you heading into CPI tomorrow. Basically, what we like to do is when the CPI report is out, we like to wait for someone to get trapped. So either the bulls or the bears or possibly even both are going to get trapped. And then once someone gets trapped, we know the levels where the bull and the bear traps were created. And then what we do is we take advantage of those levels by playing the reversals, right? So those are some tips. Those are some tricks that I can give you. Pre-market price action is going to be extremely important. The first 30 minutes to 1 hour is going to be extremely important. And I think tomorrow we're going to do fairly well. And I think it's going to be a great day. So I'm looking forward to it. Those are our key levels. That's how we're planning to trade the best setups at the best prices. Pre-market is going to be extremely useful for tomorrow. And like I said, study where the bull and bear traps are getting created and then play those levels in the pre-market. So if this does have some sort of gap up, like I said, if it does, then you're going to want to look to see where the massive crash triggers and then look to see where the support cracks. And then you short when it retests that support level. You wait for it to crash first, miss out first, and then you wait to short that previous support level. It should react as a resistance instead of doing the double top, right? And then we know there's major resistance at 413, and we know 414 would be one of the most phenomenal levels for puts. So in terms of our key breakdown cheat sheet from top to bottom, 414, 413, 412, 400 and 972, and then you could say 408.60, some support right here, 408.60s, and then 405.70, and then 403.70, and then 401.30. So those are your levels, those are your ranges. If one of those levels reacts as a support level, it spikes to the next level. If one of those levels reacts as a resistance level, it drops down to the next level. We aim for one target, and we're not risking a lot. We're not risking an entire level, right? And you want to focus on the higher levels and the lower levels. So our main key levels are going to be the pre-market bull and bear traps for tomorrow. 414, another key level, pre-market highs, pre-market support, if you know the key levels. 409.72, if it gaps down, another key level. We're going to keep an eye on this 406 support. We're going to keep an eye on this 403.70 gap. And we're going to keep an eye on this 401.30 gap, right? Very, very simple stuff, man. And we're going to use bullish reactions, utilize the 30-minute chart, wait for strong 30-minute confirmations, wait for the bull and bear traps to get created. Tomorrow should be a fairly simple day. Now, let's discuss some of the trades that were made today. So I started off the day very, very hot. I started off the day very well. I went 6 for 6 scalping. I was doing phenomenal. Then I continued to trade, and I noticed the trades weren't as good. The price action wasn't good. Today was extremely choppy day. It was decent for scalping in the morning. I liked it, but towards the middle of the day in zombie hour, I didn't like how it was trading. It was all like sideways chop. I really didn't like it. I found the morning to be a lot easier to trade, in my opinion. But the main trade, I just really want to kind of go over the main trade that screwed me up because I normally don't have losses as big as this, but this loss put me green to red on the day, and I was already up nicely on the day, which is unfortunate. But these are some tips that I can give you in terms of like cutting losses. So SPY was just having like this slow, gradual uptrend. It wasn't going too crazy, but it was uptrending for, from 11 a.m. all the way up until like 2:30 p.m. This was uptrending for quite some time. Now, these are some tips I can give you. If SPY is having this like slow, grinded uptrend and you see something like this, so I was looking at the 30-minute chart on my phone, and the candlestick did not look gray and trend reversal and bearish like this. That's very unfortunate. It looked different on my phone. So if I would have seen it like that and I was looking at my desktop, then I wouldn't have been doing calls. Obviously, 411 wasn't a great level for calls. I was hitting calls towards the lows, and then I was also hitting calls towards the top, chasing and milking this uptrend. And if you watched my video yesterday, I even told you 410.50 to 411.30 range would be the put zone for puts for an initial pullback. But I even went against that. I had some wins doing that, but then I got caught up in a loss. But anyways, 30-minute chart, man. This is like a bearish trend reversal candlestick, and it's at key resistance that hasn't been tested. If you watched the video that I posted yesterday, I told you guys the initial reaction should be a pullback when it goes to the 410.50 to 411.30 zone. And I said that because that was previous support that cracked that has not been tested. So what do I mean by that? You can see right here, this is support. This is support at 410.50, and then you have a lot of resistance at 411.30. So when it cracked this 410.50 level, it had a massive sell-off, and it was never tested. That support level was never tested really until the pre-market, until today. So it's likely going to have a pullback, like I told you. And surely enough, it had a nice pullback. Went from 410.80 all the way down to 409. Now, this is where I went wrong. Another reason where I went wrong today, I didn't even use the pre-market charts today. I didn't even look at the pre-market charts today. I did not trade the most responsible as I normally would have. And this 30-minute candle, man, was just super bearish. If I would have saw that and I would have been studying the pre-market charts, there's no reason why I would have been hitting calls at 410.80. But like I showed you, man, this is a trend reversal bearish candlestick at resistance at pre-market highs. That's super bearish confirmation. It's slowly grinding up. It's not really doing anything. It keeps faking out. It keeps trying to drop. See, these wicks keeps trying to drop, right? Not too bullish. And then in terms of when things just hit the fan and it's just a free fall, well, once it cracks this level, so these two wicks, these were those bottom of the 30-minute wicks right here, this level right here, this is 410.50. If 410.50 cracks, what's the next level? The next level, as you could see within our key level breakdown cheat sheet, is right here. So if it goes under 410.50, we go to 409.60. And as you could see, where did it bottom at? It bottomed at 409.30. So fairly accurate, right? So my issue was, the mistakes that I made was, I didn't look at the pre-market. I didn't see the 30-minute confirmation properly because I was looking at my phone and it appeared different. I've noticed the gray candlesticks appear different on my phone with the app I'm using. But another reason was just chasing calls, buying calls towards the highs. So I was buying on this dip right here towards 410.70. I bought on this dip right here, sold the rip, had a nice win, and then I tried to do it again and it didn't work. But the main issue, so it could have been prevented by looking at the pre-market chart. It could have been prevented by looking at the 30-minute candlestick properly. But the main issue was just seeing this. If I look at the key level sheet, it says if we go under 410.50, the next level is 409.60. That's a big risk. Why would I hold calls through that? Meaning, when I'm buying the dip right here at 410.80, if this cracks 410.50, I need to be stopped out. I need to get out at like 410.30, 410.25 max. Like I need to sell, cut my loss, get out. Problem was, not that it drops so quickly. That's just an excuse because, you know, we're in a situation as traders, we can scalp. We can click a button and we get filled instantly. Like, yes, sometimes it might rug quicker than expected and we might lose a little bit more, but there's no excuses and it's unacceptable, man. I hold my loss a little bit too long. One of the reasons why is I wasn't paying attention to levels, man. I didn't even realize how big this can drop if 410.50 gets taken out. You know, that was very strong support with the bottom wick, but the reality of the situation is, you know, it has been gradually going up, but it can crash at the speed of light during power hour or during market hours trading with the volatility time. And if it cracks and turns 410.50 into resistance, it's going to have a nice sell-off and it's going to want to retrace back to the bottom of this wick, towards this bottom wick right here, towards 409, that key level and that previous closing price. So the main mistake, along with, you know, how it could have prevented, was not cutting the loss, man. If there's bottom support right here and this cracks, you got to cut the loss and you got to get stopped out. So sometimes it's just going to crack 410.50 and slowly go down and you cut the loss. Sometimes it's going to crack 410.50 and drop 30 cents instantly. And then you're going to panic. And what you need to do in that situation is just cut the loss, man. Cut the loss. Sometimes it's going to be a little bit bitter. It's going to drop a little bit quicker than you anticipated. But you just got to cut your loss, man. You just have to click that sell button and just get out, man. So in terms of like realistically where I could have gotten out on this, I would say right here, 410.40. Very, very realistic for me to get out towards 410.40. It was generous. It had about 3 minutes of consolidation. It even popped back to 410.50, confirmed at resistance and cracked. So basically, I should have been exiting either right here towards 410, towards 410.30, 410.40, or right here at 410.20. It's forming lower highs. It's turning this previous support into resistance. These are all bearish confirmations. It's just happening so quickly, but it's quick enough to get in and get out. So I ended up holding, and I sold this at like 409.60. I held for a much bigger loss than I normally would, and I paid the price for that. I was getting used to and adjusted to the slow scalping price action for the day, and this move really caught me off guard. I completely underestimated it, and I was unprepared for it. But I can tell, man, towards the later of the day, I can already tell, man, like I was not in the mood, and I just wasn't feeling it. And I was really bored. And, you know, in terms of trading, it has to be boring, but you can't be, you know, making stupid trades when you're bored. Like, trading should be boring. It shouldn't be exciting and fun. You should be trading the best sets of best prices, and it should be boring. But it shouldn't be the type of boredom where you're just going to take stupid trades because you're up, like I was doing. I mean, we all know that was a terrible level for calls in the first place. And if I'm going to get in towards the highs, which is something I would never recommend, milking the trend, you got to have a tight stop, man, because once that support cracks, it could be a free fall, and you don't have a lot of time to sell. But it was generous. I'm going to say it was just generous because I had a good 7 minutes. I had a good 7 minutes to get out at a fairly decent price. But I chose to hold, and that's what you get. If you're going to hold through those key levels, my risk is going to be 409.60 because that's next support level. So some tips I can give you, man. Preparation. Put preparation into your trades. Study the pre-market levels. Study the 30-minute levels. Prepare to trade the best setups at those prices. Do not go buying calls towards the high end of the channel. Do not go buying puts towards the low end of the channel. Do the inverse, do the opposite, and don't go milking the trends, and avoid the middle, focus on the bottom and the highs of the channel, right? Calls towards the lows, puts towards the highs. That's what I would do. And be aware of where these situations can get created, because this is all predictable. See, I knew that in the pre-market. I said, if we go under 410.50, we sell right off to 409.60. So if this goes under 410.50 and I don't cut my loss, guess what? It's going to drop $1, and now I'm losing big, right? So you got to respect that. You got to know your levels. The levels were very, very on point. Look at this: 411.30, 410.50, 409.60, 411.30, almost the high of day, 410.50, major support, spot on level. And then under that, 409.60. The levels are fucking perfect, but you have to trade them well, and you have to focus on puts towards the higher levels and calls towards the lower levels. So I would say, like I said, before we made the trade, lack of pre-market preparation, not even looking at the pre-market chart, and seeing the 30-minute chart incorrectly, not seeing that trend reversal doji. On my phone, it was not showing it was a doji. It was showing it looked different. And then just not respecting the key levels, not respecting that if 410.50 cracks, you know, you can only hold it for so long. You're going to have to cut that loss at like 410.30, 410.20. You're going to have to get out. You don't want to hold to 409.60 like I did. So those are some tips. And tricks that I can give you, but you have to see all of this happening before it actually happens. You need a solid plan. You need a cheat sheet of your levels. You need to understand if these levels react as a resistance, then it drops back to the next level. If these levels react to support, then it spikes to the next level. And you want to focus on the lower levels and the higher levels, lower for calls, higher for puts. And yeah, those are some tips and tricks that I can give you. So that is how, that's the main trade recap that I wanted to go over. I had many wins, but we're not going to be going over those. The most important was that loss, because you guys need to understand the market can flip quickly. You need to understand the zones. Some zones are wider. Some zones, like for example, you got to understand the zones. 411.30 to 410.50, that's an 80-cent zone. 410.50 to 409.60. That's a 90-cent zone. You got to understand tight zones, wider zones. You got to understand when the crazy traps are going to get created. You got to understand what times they can get created. Market open, power hour. These are all things you have to be aware of. Volatility can be a very great thing, but it can also be a very dangerous thing. That is why you really need to focus on the bull and bear traps, and avoid buying calls towards the peak and avoid buying puts towards the lows. Especially during volatile trading hours, right? Don't go against trends. Don't go against bull and bear traps. Identify the floor though, and adapt and cut your losses quickly. Understand the ranges. Understand where big losses can get created. Right here, if it takes out this key support, it's going to have a big crash. Understand that. Capitalize off of that. But you must prepare for this all beforehand, and you must see it coming beforehand. So write out your levels, prepare one day in advance, and stick to your levels, stick to the game plan, focus on the 30-minute charts, Focus on the floors, focus on the roofs, focus on the bull traps, focus on the bear traps. So that is how you trade the best setups to those prices. Those are the mistakes that I ended up making today. With that being said, if you do want to join Trader Society, we have a couple spots left. It's going to be sold out, and we're going to be raising the price by the end of this week. We have a couple more spots left after this, and then towards the end of this week, this is going to be sold out. We only have a couple more spots left. So if you want to join at this price, it's a one-time fee. It's lifetime access. After that, when the spots fill up, we're going to be raising the price. By the end of this week, it will be sold out. So it's the first link down below in the description. You get lifetime access, and it's a one-time fee to the Discord server, to the trading plans, to the trade analysis, to the real-time trade alerts, to the SPY floor, to the moderators within Trader Society, the networking opportunities, the course, the video lesson library, over 100 hours of content, the live trades, the live trading streams, the live trading voice channels. There's a lot to it. If you want all the information about Trader Society, and if you'd like to join, it is the first link down below in the description. I will see you guys tomorrow. We're going to absolutely crush it on the CPI inflation report. In terms of how members did today, it wasn't our best day, but we still managed to do well than most people end up doing within the market. We still had fairly decent results. So we had 45 people go green, and we had 11 red. So not the best, but not the worst, and we're going to continue to crush it. Yesterday we had 71 green, and nobody went red. With that being said, we will crush it tomorrow. I will see you guys then.